Good morning, everyone, and a lovely start to the week with the final session on the miscellaneous provisions under the company law, where we are going to cover the remaining portion. In the last class, we had covered the topics of removal of company's name from the register of companies. That was an important aspect which we had covered along with the valuation rules. And today we are going to cover the rest of the topics again, small topics, including government companies, dormant companies, Nidhi companies, fraud under section 447 and so on. Hope you must have gone through the lecture on the YouTube channel available at ICAI YouTube channel. And if you have any queries, you can very well raise it to the query box. And then during our lecture, if you think that there is something important which has to be covered, then I will try to cover it. In the meanwhile, I have sent the presentation also. You can download the same from the query box, the login of the ICAI BOS website. And then the questions have been sent also. MCQs questions have also been sent. So as I said in my earlier class, friends, these are small topics, which if it comes in exams, would be a direct question. And because these are small topics, you can very well study it instead of going for a very broader topic where we have a lot of permutation combination. A government company has 2 sections. So if you study about 2 sections, which you will be able to recall, remember also, because it's about 2 sections and it's very specific. So studying these small topics will really boost up your confidence level, because when you appear in the exams, when you approach the exams, you know that you have covered the other aspects also of the main the content in the Companies Act. So when you're covering the other smaller aspects, your confidence boosts up. If it comes in exams during that 3-hour strategy, obviously it gives you a smile on your face. Oh, I've studied this topic and a question has come from the government company section. So that again boosts up your confidence during those 3 hours. And the chances of getting good marks out of this topics, when you study these topics, I think the probability of getting good marks increases. So that is why my strategy, my suggestion is always to cover all these small topics which are very specific. Questions are very specific and easy to recall, and nothing very technical to understand, because these are all very standard procedural issues section. Okay, so let me go ahead and start with the concept of government companies. In the meanwhile, those who have logged in, can we say good morning to everyone? So people who have logged in, just say good morning so that I know Divya is there. Good, great, Divya. So Divya has logged in. Early morning. Hopefully the weather is now getting lighter in terms of the cold, but still the cold wave is there. And we can see it across the country, especially in the northern part. So the government companies, friends, we see there are a lot of government companies. If you list down all the government companies, you'll find hundreds of government companies which have been formed by government. Yes, there's a basic question which always comes: is the job of the government to do business? Anyway, I mean, that will not go into details of understanding why the government has created so much of government companies and why it is doing business. Rather, the job should be to administer. I think the one basic reason is to create more on the social front, to distribute the capital across the country, and to generate more employment. I think that is the basic purpose of all these government companies. I think the idea when it was formed, the basic purpose was this only. Okay, so as per section 245 of the Companies Act, so you refer to the section, and the government company means any company which is not less than 51% of the paid up share capital. Please note it down. Exam point, friends. Please note it down. It consists of equity and preference. So 51% of the paid up capital of equity and preference both. is held by the central government, first is the central government, or by any state government or governments. That means if there is more than one state government involved, or partly by central government and partly by one or more state government. So it includes every combination, Union of India along with Government of Rajasthan, Union of India along with Government of Tamil Nadu, or Government of Tamil Nadu along with Government of Madhya Pradesh. They come together to form a company where 51% of the paid-up capital is held by them, including of both equity and preference shares. Then they will be termed as a government company, which includes a subsidiary of the government company also. So a very simple definition of a government company, very logical, where the government is the majority shareholder. So you name any company: Steel Authority of India, LIC of India. There are hundreds. Bharat Electronics Limited. It was Air India now, which is now being sold off to Tata's. So Air India was a government company. So there are so many government companies, big scale companies, which have spread their wings and doing business, large businesses having turnover of thousands of crores of companies. The railways belong to the government. And there are so many government companies which are listed also. It's not about that they are not listed. They are listed also. So we have government companies which are listed. And majorly those government companies which are primarily held by central government, they are listed. You will not find much of the state government companies which are listed. So the paid-up share capital shall be construed as total voting power, where shares with differential voting rights have been issued. So it will be, when we consider the total paid-up share capital for calculation of this 51%, then the total voting power, including the differential voting rights, would be calculated. So a very simple definition. Now, what more such differentiation can be brought into the government company? I think apart from the compliance part, we can bring in more reporting requirement, or we can exempt these government companies from certain parameters. That is the only possibility in company law. I mean, other than that, you say that they don't have to file returns. No, it will not be done. They don't need to do audit. That is not required. So they don't need to comply with the IFC regulations, the regulations of 185 investigations. No, I think these are all common sections. So there could be only the procedural part of the reporting. So where the central government is a member of a government company. So the exam question is, friends, what is the requirement when the central government is a member of a government company? Then the central government shall cause an annual report on the working and the affairs of the company. So the requirement is they have to prepare an annual report of the working, and to be prepared within 3 months of its AGM, before which the comments given by the Controller and Auditor General of India. Just 1 second. Controller and Auditor General of India before, and the audit report are placed under the provisions of section 143. Fine. So friends, we all know there is a CAG, those who are doing articleship, and in big firms, the big firms do get an allotment of government companies, and the allotment is done through the CAG mode, Controller and Auditor General of India. So they have to prepare the annual report within 3 months of its AGM, before which the comments of the CAG, so AG will give their comments on the audit situation of that particular company. And after preparation, as soon as maybe after such preparation, laid before both the houses of parliament together with a copy of audit report and comments upon or supplement to audit report made by the CAG of India. So that means first they have to prepare within 3 months of its AGM, and after preparation, as soon as maybe after such preparation. So there is no such time limit, but then it is then as soon. So that means once it is prepared, in the next session of Parliament, it should be placed in both the houses of the Parliament. So the extra requirement is because it is a government company, it should come finally to both the houses. And that is why the requirement that the CAG comment should be included, because CAG is again an independent body which will offer its comments on the status of the audit of that particular company. So remember, if the central government is a member, the same has to be presented to both the houses. Same has to be presented to both the houses with the copy of the audit report. Where the central government is not the member of a government company. So now we assume that where the state government is a member of the government company. So where the state government is a member of that company, or where only one state government is a member of that company, that state government shall cause an annual report on the working and the affairs of the company. So that means now the responsibility lies on the state government, that they have to prepare the report on the working and the affairs of the company. Again, prepared within the time specified in subsection 1 of section 394. So again, the time limit is 3 months. This is the 3 months of its AGM. So that same particular provision will apply to the state government also. And once it is prepared, instead of presenting it to the Lok Sabha and the Rajya Sabha, it will be presented to both the houses of the state legislature. So where there is a state government, so if there are multiple state government, the multiple state government will prepare the report. If there is only one state government, that state government will prepare the report within 3 months of its AGM, and the same will be presented to both the houses of the state legislature. So the rule is same for both the companies, whether owned by central government or state government. Only thing, the responsibility has been casted upon the central government, and if it is a state government, the responsibility has been casted upon the state government. Time limit is same. Time limit is same for both the companies, and only the houses will differ. Because it is a state government, it will be presented to the state legislature, and because it is a central government, it will be presented to both the houses of the Parliament. So that is the provision regarding government companies. Other than that, every law, every section, every rule will apply to these companies, except if in those sections there is an exemption to that government company. That is fine. There might be certain sections where the government company might be exempt from compliance of those sections. To that extent, that exemption will be given in that particular section. But in general, in 394, there is no blanket exemption given to the government companies. So I think it is very clear. Any questions on the government company? Examples of government company. I have given examples of government company. There are private, there are state government companies, like you have a lot of institutions, state government institutions, which have been funded and started by state government. There are a lot of government companies which belong to a particular state for a specific purpose. Because I come from MP, so I know a lot of companies which have been formed with the stakeholding of the MP state government. There is an industrial area. For that industrial area, they have created 2-3 companies for development, for maintenance, for promoting. So that is a state government company. So that was about government companies, friends. Next, we move to the status of dormant companies. Very important. Again, we have jumped from 394 to 455. 394 to 455. Now, what does dormant company means? So we should be very clear. There's a government company, there is a strike-off company, there is a dormant company, there is a winding up company. These are all, especially the dormant, the strike-off and the winding up, more or less they come under the same heading of closing down a business. Closing down a business. And remember, all these concepts have been introduced so that there is this word, ease of doing business. I hope you must have heard this word, ease of doing business, where in the last few years, India has jumped in the ranking of ease of doing business. The index has been created worldwide, and India, after initiation of certain steps like removal of a lot of laws, enactment of few laws, enactment of certain sections within the laws, and because of these steps, India has jumped into at a higher level under the ease of doing business index. And one such process adopted by government is to allow company to close down its business, to allow the company to close down its business. So removal of the company's name from the registrar is one again step. Winding up is another step. Voluntary liquidation under IBC is another step, where provisions have been created to give options to the company to close down its business under various mechanisms. So it is up to the company to adopt any mechanism, any process. So that is why it is one of the important features because of which the India's ranking has gone up under the concept of ease of doing business. So remember, a lot of steps have been taken, and when the government initiates certain laws, brings in certain rules and regulation, there is a wider objective. There's a wider objective. So sometimes the objective is to meet the world regulation requirement, the W2A agreement. Sometimes the objective is to project a better image of India so that more people come into India to do business. Some things are introduced because there are certain activities which are going on, maybe outside the world or within India. So to curb that activity or to promote that activity, either way. So that is why these laws are framed. Especially if you see in the current budget, there has been a tax introduced on virtual digital asset. That is, to name it, it's on cryptocurrency and NFTs. Now, because worldwide, there are so many transactions which are happening. Worldwide, it has gained momentum, acceptance. Therefore, these laws were introduced. In India also, we can see a lot of activities going under this domain. So that is why that law was introduced. So there are various reasons why sections and laws are introduced. Anyway, so status as a dormant company, very important, friends. Which companies could be classified as a dormant company? Which companies could be classified as a dormant company? So where a company is formed and registered under this Act for a very important, highlighted. Future project. For a future project. Or to hold an asset or intellectual property. So the word is or. And as and. So that is the second. So that means along with that, it does not have any significant accounting transaction. Significant accounting transaction, SAT. Again, the word or, an inactive company. So this is again important. So there are two conditions. There are two conditions which are now coming into picture, friends. The two conditions are, first, it should have been formed as a company for any future project or just to hold an asset as an intellectual property. This could be either one of the objectives of the company. And along with that objective, the company should not have any significant accounting transaction that is been defined. We'll understand that. Or it should be an inactive company. Again, it must have been defined that what does an inactive company means. So these are, friends, again, new terminology. Last time, remember, we had understood the terminology strike off, registered valuers, vanishing companies. These were new terms which we studied in our last lecture, which again broadens your knowledge, your horizon, your vision of understanding what is happening in the economy. So here also, significant accounting transactions, inactive company. Then it may make an application. The company will make an application to ROC, registrar, in such manner as prescribed for obtaining the status of a dormant company. That means whenever the prescribed manner has been given, that means there are rules. So miscellaneous rules must have been created for our dormant company status. There must have been certain forms. So those forms must have been designed, and you need to comply with the rules and regulations for the dormant company status. So if any rule is relevant, we'll study out here. So I hope you have got the point. There are two conditions. Exam point of view, under what status the company can take a status or can be classified as a dormant company. There should be two answers. Point number one, point number two. Point number one, covering for future project plus no significant accounting transaction, or holding an IPR plus no significant accounting transaction. And or third is inactive company. Or third is inactive company. So there are three situations. One situation is common, holding an asset or a future project, clubbed with no significant accounting transaction. Now, what does SAT means? What does SAT means? Means any transaction other than payment of fees by the company to ROC, payment made by it to fulfill the requirement of this act or any other law, allotment of shares to fulfill the requirement of this act, and payment for maintenance of its office and record. So any transaction which is other than these transactions, they will be termed as significant accounting transaction. They will be termed as significant accounting transaction. And if there is a significant accounting transaction, you cannot be classified as a dormant company. You cannot be classified as a dormant company. So that significant accounting transaction will be consisting of any transaction. So if you are even doing a small payment out of that company, and that payment is not related to fees of registrar or for fulfilling the requirement of this act or any other law. Let's say you have to take a registration under any other law and you are paying that fees, that is allowed. You are paying taxes, TDS, TCS, that is allowed. But apart from that, if you are making any payment for any salary of the director, except when you prove that that salary to the director has been given for maintenance of his office and record. That director is working to maintain the records of the company, and the records even consist of very minimal thing. Now, would you say that's a payment to auditor? So it is again, which is a payment made to fulfill the requirement under this law, because you have to get the books accounts audited. So that is again allowed. But entering into a small purchase, a sale, trading, other income, any other transaction will be treated as a significant accounting transaction. Now you would question, sir, what type of company should be classified as dormant companies? Future project, hold an asset for intellectual property. So today you form the company. Why do you form the company? You have an objective of getting a government tender after 3 years. Government has come out with a lot of schemes, and you believe that yes, after 3 years, probably I will be eligible for that particular government tender. But that government tender might have certain conditions, that the company should have been formed 3 years back, should have a minimum 3 years of experience, or whatever the criteria. So that means you are forming the company for a future project. You have purchased a land today, but you don't have an objective of building up anything on the land, but then you think that after 5 years, probably I will start working on that land for a particular project. So you are holding an asset. You're holding that land, but you don't intend to do any business today. And you don't want to comply with the requirements of the law. Therefore, you classify yourself as a dormant company. Or today you have developed an IPR, which may turn out to certain benefits, but in due course of time, it will take certain time for the market to accept that concept. But then because you have developed, you have done the research and development activities, and you have created that technology. So you take that patent under the company's name, that intellectual property under company's name, but still no business is going to be done. So for that purpose, because you're holding the IPR, so because it is under the company's name, you hold that IPR under the company's name, you want to maintain that. So you classify yourself as a dormant company. So there are a lot of practical situations which may give the need to the management that why we need to comply with so many legal requirements. Let's classify ourselves as a dormant company for the time being, till we actually start doing business. And once we start planning, we will reactivate the company from dormant to normal status. So dormant means you're just sleeping for the time being. You're sleeping for the time being. I hope the concept of dormant company is clear. Which companies will be classified as dormant company, and what is the reason? Why do they need to do that? Because for a future project or holding an IPR. So as per the rule, they need to make an application. MSC is because it falls under miscellaneous provision. And that will be done, that application will be done as per the rule after passing SR to this effect in the general meeting, or after issuing a notice to all the shareholders of the company and obtaining a consent of at least 3/4 of shareholders in value. Same, remember in the previous case, in the previous lecture, we had discussed this. Again, same provision with respect to the strike off of companies. Either you get a SR or consent of 3/4 of shareholders in value, either of the status. So before making an application, get a SR passed, along with the application, attach that special resolution, and then you are eligible to get the status of the dormant company. So remember, now in exam, if a question comes in, first, future project, holding an asset and IPR, plus no significant accounting transaction. That is a condition. Second, inactive company. That is again a condition. Third, for filing an application, approval of the shareholders by SR or 3/14 consent. Write all these points. So if these conditions are satisfied, then you are eligible to be classified as a dormant company. Now, which companies are not eligible? Which companies are not eligible for the same, for applying under this rule? For applying under this rule. So again, exam question. Exam question. A company shall be eligible to apply under this rule only if, very important, no inspection, inquiry, or investigation has been ordered or taken up or carried accounts against that company. So remember all those sections of 206, 207, 208, 210, 212, where inspection and inquiry are being carried out. No prosecution has been initiated and pending against the company under any law. Under any law. The company is neither having any public deposit which are outstanding, nor the company is in default in payment of thereof of the interest. And the company is not having any outstanding loan, whether secured or unsecured. If there is an unsecured loan, the company may apply under this rule after obtaining concurrence of the lender. You must have taken a loan, an unsecured loan, to purchase that land, to incur expenditure on the R&D to develop that IPR. That might be a possibility. So there is an unsecured loan pending from the director, let's say. So you take a consent from that unsecured loan lender and file it along with the MSC form. Then there is no dispute in the management or ownership of the company, and a certificate from the management will be given that yes, there is no dispute and there is no case filed under the operation and mismanagement. We are all working as bye-bye together. And obviously the company does not have any outstanding statutory dues, taxes payable to the central government or local authorities. So you may give a declaration for the same, or a certificate attached from a chartered accountant, maybe, though it is not mentioned out here, but just trying to extrapolate it. Yes, possibly if you attach all these documents, that will be sufficient enough to prove that there is no outstanding dues. So these are the situations where you are not eligible. That means if you don't fall under these categories, you may not be eligible. So this is a 4-mark exam question. When you are not eligible to apply for the status of a dormant company, so all these situations, and very simple situation, I think Logically, if you analyze, no inspection, no prosecution, no deposit, USL, IPD, again D, dispute, again D, duties. So it is all about DDD. IP, intellectual property with 3D and unsecured loan. Intellectual property with 3D, you understand 3D movies, with unsecured loan. So this is the situation where the company may apply. Can the registrar take the action on its own for classifying the company as a dormant company? So the answer is yes. The answer is yes. In case of a company which has not filed financial statement or annual return for 2 financial years consecutively, the registrar may issue a notice to the company and enter the name of such company for dormant companies. Now, don't get confused with the power of the registrar for striking of the company's name. For striking of the company's name. Remember, for removal of the company's name, commencement of business within 1 year, not carrying on in business for a period of for immediately 2 preceding financial year, and they have not obtained the status of a dormant company. So this is a condition out here for removal of the company's name. So either you have applied for a dormant company status and you have not applied for a dormant company status, the registrar can remove your name, or it can also classify your company as a dormant company. So the registrar has got 2 ways. When you are not carrying on in business and no application has been filed out here, here where you have not filed financial statement. So obviously, in turn, it will mean that you are not doing any business. So in that case, the registrar may make an application either to remove your name, strike off your name, or to classify the company as a dormant company. So there are 2 stages where you can be classified as a dormant company. One, by the company itself, by making an application in form MSC1, and other, the step can be taken by the registrar on non-filing of financial statements or annual returns for 2 consecutive financial years. Now, if you are classified as a dormant company, then what is the requirement to have a minimum number of directors? Be it private or limited company, we know that there is a minimum criteria for having minimum number of directors. So dormant company shall have such minimum number of directors as may be notified, file such documents and pay such annual fees as may be prescribed to the registrar to retain its dormant status in the register, and then become an active company on an application made on this behalf. So we need to ensure that we should have minimum number of directors. We should pay such annual fees, which may be less than the requirement for a normal company. So these are all prescribed. Again, we need to refer to the rules. Whatever the rule says, as per the rules, we need to maintain the minimum number of directors and pay the fees for keeping the status of the company as a dormant company. So as per rule number 6, shall have minimum 3 directors in case of a public company, 2 directors in case of a private company, and 1 director in case of a 1-person company. So the rule remains same. There's not much of difference for the normal company and the dormant company status, except to that extent that the rotation of auditors may not apply on such dormant companies. That is fine. So that's the only flexibility which has been given for maintaining the status of the dormant company, friends. Along with that, you may ask, sir, if I am dormant, do I need to file all the annual returns? So dormant company has been given the flexibility or the benefit that they should file a return of a dormant company, indicating all the financial situation, which should be audited by a chartered accountant in practice in form MSC3, along with the fees, within a period of 30 days from the end of the financial year. That is important. That means by 30th April, you should file this return of a dormant company. Anyway, because it does not require much of the activities, there's no such activity, there's no such operation, so you can prepare that return and file it. And if there is any change in the directorship or allotment of further shares, and for that, if any requirement is prescribed under the law, that you have to fulfill. So this is written out here. If the company shall continue to file the return or returns of allotment and change in directors in the manner within the time specified in the Act. Now, what could be the exam question? So the exam question could be, what are the relaxations given to the dormant company? So we'll start from the directors, the rotation of the auditors, the filing of the returns. Directors, auditors, and the filing of the return. That is the benefit. That is why the company should classify itself as a dormant company, because it is getting certain benefit. So there could be 2 exam questions, friends, 3 exam questions. 1, when can we classify ourselves as a dormant company? 2nd, situations where we are ineligible to file the status of a dormant company. Remember that IP, 3D, USL. 3rd, relaxations to that dormant company. Relaxation to that dormant company. I hope the concept is clear and the differentiation is there between the strike-off and dormant. In strike-off, the registrar can sue moto based on certain conditions. Here, even the registrar can do it. So the registrar has 2 options, either to remove the name or to classify the company as a dormant company when you have not filed for annual return for 2 years. In that case, it was not doing any business. So non-filing of annual return could mean that you're not doing any business. That could be one possible thought. So is strike-off or taking a status of dormant company a negative step? So answer is dormant company status is not a negative. It's not a negative step, because you are being dormant for a particular time period. While in case of removal of your name of the companies from the ROC is because you are not doing any business and there's no intention of doing the business and you want to close down the business. That is why I would like to apply for removal of my name. Here I am not applying for removal of my name. I am saying my name is there, but only for the time being I am sleeping. Let me have a good sound sleep, and then I will become an active person. So the differentiation should be very much clear in your thought process, that why dormant and why removal. Now, how do I regain my status as an active company? How to regain the status of the active company? So for that, we need to make an application in Form MSC4 and shall be accompanied by a return in Form MSC3 in respect of the financial year in which the application for obtaining the status of an active company is filed. And after considering the application file, issue a certificate in Form MSC5. Issue a certificate in Form MSC5 allowing the status of an active company to the applicant. So that means you can become active where you make an application. The company will come and make an application in respective forms. That is, from this financial year, I want to classify myself as an active company. So whenever you do the search, of a particular company, you will find the status of the company. The status will be mentioned as active, dormant, strike off, company under CIRP, company under liquidation. These are the various stages of a company. So when you read all these laws, you will understand what you get, what is the type of information you get when you do a search of a particular company, and what you have to keep in mind when you're dealing with that company. So you should not deal with a company which has been striked off. You should not deal with a company which is dormant, because you should not, because that will be a violation of the law. Not from your angle, but from that company's angle. Then there could be certain situation where by default you tend to lose the status of a dormant company. You tend to lose the status of a dormant company. Now, what is that situation where you lose this particular status of a dormant company? So where the dormant company does or omits to do any act mentioned in the grounds in application in Form MSC1. So either it does any activity which it is not allowed to do it, or which he is supposed to do it, but it omits to do that particular act mentioned in the grounds of the application. Then the directors shall within 7 days from such event file an application for obtaining the status of an active company. So one is directors, they know that they are resuming the operations. They want to start doing any business. And they file an application. But here the situation is, for the purpose for which this status was granted, probably that purpose has gone and it has entered into a, let's say, significant accounting transaction. Though they did not wanted to, but then they have entered into a significant accounting transaction. So in that situation, they should apply within 7 days of such event. In that case, let's say in the first case, there's no time limit which is mentioned, but here The time limit is mentioned within 7 days. So on the happening of an event, you have to apply. Then there could be a status where suo motu action can be taken by the registrar. Suo motu action can be taken by the registrar, friends. See, again, in every situation, you'll find that the registrar has been given the power to take action. And obviously, registrar is a very powerful person, because of which we understand that ROC is a powerful person. So when will the registrar take the action? When the registrar has reasonable cause to believe that any company which has been registered as a dormant company under this jurisdiction has been functioning in any manner, directly or indirectly, he may initiate proceedings for inquiry under section 206. So within the powers of 206, he may initiate the inquiry to find out whether that dormant company is doing any transactions. And after giving a ROBH reasonable opportunity to be heard, it is found that the company is actually functioning, doing operations, but the same is not being reported to the registrar. Then it may treat that company as an active company. So the suggestion to your client is, friends, until it is very extremely necessary to classify yourself as a dormant company, don't apply for it. Just keep on filing the return, ensure that you comply with the laws. Even if you are not doing any transaction, business operations, fine. Keep on complying with the requirement of the law. That is all. Only a marginal extra cost has to be incurred. Because by mistake, by ignorance, if you enter into any transaction, once you have been classified as a dormant company, then later on the consequences are heavy. The consequences are heavy. And the thought that you will save on cost and the compliance requirement by being classified as a dormant company, vis-a-vis these costs which can be imposed upon you if you enter into any transaction, even by ignorance, that could be very much heavy or high. So until we are very clear and you closely monitor the process of dormant company, you should not classify yourself as a dormant company, friends. That is the suggestion. So regarding the status of the active company, there could be 3 situations. One, you file on your own that I want to start my business operations. So I'm applying. And in this financial year, please classify myself as an active company. So whenever you think fit. Second, if you have entered into any transaction, which has been mentioned in the application when you file to obtain the status of a dormant company, which you should not, or you have mentioned that I will do this, but you have not done that, then within 7 days. And third, when the registrar has got reasonable belief based on certain information, and after doing an inquiry under 206, it may remove the name from the status of dormant company and classify yourself as an active company. Any questions, friends? Any doubt regarding this whole process of dormant company? Now, What are the situations? Very important. Very important. What are the situations where a dormant company can be striked off? What are the situations when the dormant company can be striked off? Again, a very typical situation and maybe important from exam point of view. So rule number 8 and section 455 subsection 6. They will talk about that the registrar will initiate the process of striking of the company's name if the company remains as a dormant company for a period of consecutive 5 years. So that means by default, indirectly, a window of 5 years is given to you to restart the business, friends, which is more than sufficient, where you can think, evaluate, plan, strategize, understand the market, arrange for the funds. So 5 years, if you are dormant, good. Beyond 5 years, the registrar will automatically strike off your company's name from the register. That is one situation. And second, if you have failed to comply with the requirements of this section under section 455, the power has been given to the registrar to strike off the company's name from the register of the dormant companies. So under two situations, your company's name can be striked off. And the third is obviously there. That status could be that within if you, for a continuous period of 2 years, you have not filed, then either dormant or strike off. So here the situation is, after being classified as a dormant company, can your name be striked off? The answer is yes. The answer is yes. By virtue of rule number 8 and 455 subsection 6. So the exam question, if it wants to be complicated, could be framed in such a way. What are the situations where the registrar can classify the company as striked off? Can the registrar has the power to classify the company as a striked off or a dormant company? And can a dormant company be classified as a company, or can the name of the dormant company be striked off from the register of members? So first you have to go to section for the striking of the company's name, 248, 248.1, where you have to mention why the registrar can strike off your name. Then you have to mention within 248 and 455, the registrar can either strike off or make your company's status as dormant because of 2 consecutive years. And then further, because you have to mention that yes, the registrar can transfer your company's name from dormant to strike off under situation 1 and situation 2, 5 years or not complying with the requirement of this section. This could be the possible extreme question by linking 248 and 455. 248 and 455, friends. So please note it down, how things can be interlinked between 248 and 455. If you are able to differentiate this, I think now conceptually you are very clear, and you will never forget this. And any question which is of this nature in exams, I think you will be able to answer it. So let's move ahead and close this dormant company status. So we have done 2 parts today, friends. 2 parts. Government company, dormant company. Government company, dormant company. Previous was strike of companies. Strike of companies, government companies, dormant companies. 2 marks you have assured to yourself if you have got the conceptual clarity. Maybe 4 marks also. We come to another very typical section, dreadful section of which everybody is afraid of. And when it was introduced, probably it caused an havoc in the corporate world, where the directors, the person in charge, the officers of the company, the auditors, the consultants attached to this company probably were taken aback when they read these sections and the consequences of this section, friends. Probably this is one section where people are always worried, and because of which everybody is always on the toes in terms of compliance, ensuring the running of the business operations in a proper manner, which has at least indirectly increased the stakeholders' confidence in the companies. But still, we all know that in spite of such harsh provisions introduced into the law, there have been instances and there have been frauds which are being committed in the corporate world, knowingly or unknowingly, of this particular section. So what does this section say? Again, one section, only one section, friends. So as I said, you have to study only one section, and possibility of getting 4 marks out of this one section is again very high, because we don't expect much of technicality coming out of this particular section. Now, if you recall other provisions which you have studied under the company law, you'll find that there are a lot of situations where this particular section has been referred to. So be it under 210 or I think 212, 229, inspection, SFIO, and the effect under 229 of all the inspection and inquiry, they all refer to section 447. They all refer to section 447, friends. I think there are a lot of references in this company law, and that is why I said it's a very important section. Apart from all the initial sections which you have studied in your inter-subject, I'm not touching those sections, just trying to highlight sections which you are studying in your final subject. Yes, one section which is, I think, should be of concern to all of us is section 140, which relates to auditor, I think, where if there is a fraud being committed, auditor may be liable for punishment under section 447. Very important, friends. Again, I think we have studied in our previous lecture 251 for the strike off of the companies. Just trying to recall 251, friends, where penalty, where you make an application for removing your name just to evade the liabilities and with the intention to deceive the creditors or defraud any other person, where the intention is to deceive the creditors and you are trying to apply to strike off your company's name. That means virtually you are trying to close down the business of the company. then you shall be punishable for the fraud in the manner as provided in section 447. So even if you are closing down a business, you may be subject to penal provisions under 447. So that was 251, friends. And then there are other laws, other sections, small sections. 459, I think, is one, and another one. So reference of 447 has been made in various sections. That is why we need to study in deep, understand, and then you should advise your client that what steps should you take so that you don't fall under this category, and what you should not do so that you don't fall under this category. So the punishment has been defined as any person who is found guilty of fraud. What does fraud means? Fraud has been defined. We'll see. Involving an amount of at least 10 lakh rupees. That means it should be 10 lakh and 10 lakh more, or 1% of the turnover of the company, whichever is lower. So the fraud has been quantified. Here the fraud has been quantified. Fraud has been identified. Who has committed? So the first thing, you have to identify the person. Then you have to quantify that person. And that person can be any person. An amount is 10 lakhs. In today's context, I think 10 lakhs on 1% of turnover is whichever is lower. Remember, whichever is lower. So when if you have a turnover of 1,000 crore, so that means in that case 10 lakhs of turnover. That is the lower part. So amount in today's context, 10 lakhs is a very small amount. So even if there is a fraud of 10 lakhs, you will fall under this category of 447. Remember, friends, very important. You will fall under this category of 447. Looking to the inflation part, I think 10 lakhs is a very small amount. Then, what is the consequence? Identification, quantification, and the consequence. Imprisonment, which shall not be less than 6 months, minimum 6 months, and which may extend to 10 years. And shall be liable to fine, which shall not be less than the amount of involved in the fraud, but which may extend to 3 times the amount involved in the fraud. So fine to the extent of amount of fraud, or maximum, it can go to 3 times the amount involved in the fraud. That is the first situation. That is the first situation, friends. So question by Divya is in section 445(6), 455(6), striking off from the register of dormant companies will be considered from striking from the register of companies. See, 445(6), is striking of the name from a dormant company from the registrar, which will, okay, I got the point. So it does not mean striking off from the register of the companies. It means that you may classify the company as an active company. So there are two situations. If the registrar feels that the company is doing certain business operation, then it will not be justified on the part of the registrar to put your name as a strike-off, as a striked-off company. But if the registrar finds that yes, there's no such business operation and the conditions which have been mentioned for striking off is being fulfilled, then it may strike off the company's name. So striking off from the register of dormant company does not mean striking off from the ROCs. It does not mean like that. It will depend upon the situation, and the registrar may either take it as an active company or it can strike off the company's name from the ROC. Both the situation can come in. But by default, it does not mean that the company's name has been striked off. I hope it is clear, Divya. Okay, so the fraud situation, first situation, amount, minimum 10 lakhs or 1% of the turnover, whichever is lower, subject to imprisonment of minimum 6 months, which may extend to 10 years. Along with that, a fine of the amount involved or 3 times the amount involved. That is the first situation. The second, if the fraud is involving public interest. So that means now identification, quantification, and along with that, the question of public interest. Identification, quantification, and question of public interest. So when you tick all these 3 boxes, you have identified, you have quantified, and you have answered to that question whether it involves public interest. Public interest means where you involve public money. You have raised money from the public and then there's a fraud involved. Or you have committed default from the bankers where public money is involved. So that is a public interest. So if the fraud involves public interest, the imprisonment will be of minimum 3 years, not 6 months. Minimum 3 years. So one situation, 10 lakhs plus or 1% of the turnover, whichever is lower. That could be classified under 2 heads. Public interest, no public interest. So quantification. After quantification, public interest, no public interest. Public interest, 3 to 10, 6 to 10. Public interest, 3 to 10, no public interest, 6 to 10. 6 months to 10 years, not 6 years to 10 years, right? Don't commit this very obvious mistakes. At times it happens. Plus, along with that, there is fine. Fine is in both the cases. Fine is in both the cases. Amount involved and 3 times. Except that imprisonment is different in both the cases. Right? So this is one part. So quantification greater than 10 lakhs. Greater than 10 lakhs. I think this could, you can create this chart. provided further that where the fraud involves an amount less than 10 lakh rupees or 1% of the turnover. So now the quantification is less than 10 lakh. So initial segregation will come from 10 quantification. More than 10 lakhs, less than 10 lakhs. So if the amount involved is less than 10 lakhs or 1% of the turnover, whichever is less than 10 lakhs or 1% of the turnover, whichever is less, and there is no public interest. So amount is less than 10 lakhs and no public interest. Then imprisonment for a term which may extend to 5 years or with fine. Here it is plus, but here it can be imprisonment or fine which may extend to 50 lakh rupees. So fine has been limited to 50 lakh rupees or with both. That is up to the court to decide. So if the quantification is less than 10 lakhs and there is no public interest, the term of imprisonment 5 years or fine maximum up to 50 lakhs, or it can be clubbed, either of it. So 447, I think, clearly defines three situations. Three situations, friends. The three situations are: first, quantify the amount, less than 10 lakhs, more than 10 lakhs, and the turnover criteria. That is the first step. Second step, if it is less than 10 lakhs and no public interest, less than 10 lakhs and no public interest. So your question would be, sir, what if it is less than 10 lakhs and public interest? Remember, this is the criteria. Less than 10 lakhs and public interest, so imprisonment may be minimum 3 years and maximum 10 years. Minimum 3 years and maximum 10 years. Because it is involving public interest, so imprisonment may be minimum 3 years and maximum 10 years. But if there is no public interest and the amount is low, so the imprisonment should be maximum 5 years, then the fine should be 50 lakhs, or it can be both. But if the amount is more and it is not involving public interest, the imprisonment can be from minimum 6 to 10 along with the fine. Plus fine is always there. Fine is always there in case of public interest, friends. So very important, a practical question can come from exam point of view. You need to first quantify the amount. Every classification is based on quantification and involvement of public interest. So please, when you read the question, break it, understand quantification, and second is public interest involved or not. If you pick those points, data points from those questions, I think once you have the data points, you have the solution in front of you. But if you're not able to pick those data points, then you will always be confused. So data points which we have which we should be very clear of: quantification, public interest, quantification, public interest. Then I think the question becomes very easy. Now, what is fraud? I mean, fraud has been a very generic term. We always feel when there is always a loss of money to us, we always feel there is a fraud. Now, that does not mean that when there's a loss of money to any particular person, the other person has committed a fraud. You might have entered into an agreement which clearly mentions that, yes, in event of any transaction which leads to a loss by virtue of these transactions and as per the agreement, it will be a normal loss and a business loss, operational loss. You cannot treat that as a fraud. So fraud includes any act, omission. So act means where you have done something. Omission means you were supposed to do something, but you have not done something. Both the things. You have done something. And second is we have supposed to do something and you've not done something. Concealment of any fact. You are hiding something. Or you have abused the position. Committed by any person or any other person in conveyance, which means along with some other person, with the connivance in any manner. So along with some other person, so you along with some other person. And very important, connivance in any manner with intent to deceive, to gain undue advantage from, or to injure the interest of the company or its shareholders or its creditors or any other person, whether or not there is any wrongful gain or wrongful loss. Whether there is any wrongful gain or wrongful loss, that is immaterial, friends. So the major point to prove that there is a fraud, I think everything should boil down to this word intent. So everybody needs to prove that there was an intent of that person. Now, intent can only be proven by virtue of all the sequence of events, the documentation, and the impact of those events. Cumulative impact of those events. So I'm not going to name all those cases of Satyam or so, Kingfisher, which you are all aware of. I think where the sequence of events, the documentation and the cumulative impact proves that there was an intent. Prove that there was an intent. A single one-off event, if you enter and because of which there was a wrongful gain or wrongful loss, may not prove that there was an intent. But when things are happening continuously, simultaneously, for over a period of time, repeatedly, in spite of knowing the facts that this is leading to this, the document is showing that there is a loss happening to the company each year. And you know these transactions are incurring a loss, and each year you keep on doing that transaction and the loss keeps on increasing, which shows that you are doing any act and there's an intent for some wrongful gain or wrongful loss. Now, what is wrongful gain? Means the gain by law and lawful means of property to which the person gaining is not legally entitled. So that means you are getting certain property which you are not entitled to. So it may be property of cash, any building, land, whatever you gain. Out of that, your cash balances increase. And wrongful loss means the loss by unlawful means of property to which the person losing is legally entitled to. So remember, when I say intent, there may not be an actual loss, but there is an intent. Of wrongful gain, wrongful loss. The wrongful loss means wrongful gain is gains is accruing to you. And wrongful loss is a loss accruing to some other person. Because of your act, somebody is incurring a loss. So that is a wrongful loss. You are having a wrongful loss, and that for that you are proving that intent, that cannot be justified. You know, I'm incurring losses and you're saying that my intent was to commit a fraud. How can you justify? So loss will be borne by someone else. And the gain, you are accruing the gain. So when you are accruing the gain, that is wrongful. There's an intent. Then it is a fraud. Somebody else has incurred a loss, which is wrongful, which is not entitled to. Because of your act, he's incurring a loss. And there was an intent. Because of your act, he is incurring a loss. You have entered into an insider trading. And because of that, somebody else, all the other investors are having incurred a loss. Therefore, it may amount to fraud. So from exam perspective, I think, friends, there could be various questions under 447. One is obviously on the calculation part, that for how many years he should be imprisoned, or what is the amount of penalty or fine to be imposed on that particular person. That is one part. Second part could be the definition of fraud. And there have been instances where in exam direct questions have been asked, what is fraud as per company law? What is fraud as per company law? So we have segregated the word fraud. Act, when you want to do something. Omission, where you're supposed to do something, you're not doing it. You're hiding something. Abuse of position. In connive along with others, where you have intent to deceive or injure the interest of company, shareholders, or its creators. Whether or not, remember friends, again the question is not that whether you are incurred a gain or loss. Whether or not there is any wrongful or gain, that is not there. Whether there is any profit or loss out of it, it is immaterial. There should be an intent to deceive it. So even if there is no gain accrued into it, no loss incurred to some other person, but there was an intent for gaining out of that particular transaction, making loss accrue to some other person because of that transaction, it will be treated as a fraud. So a lot of deliberations have gone into this particular section, and that is why we have spent some time to understand, because it's a very critical section, friends, 447, and you should understand the consequences. And as a consultant, as a practicing chartered accountant, as a future chartered accountant, as a professional, I think we have a big duty on hand where we need to understand this section properly and communicate to all the people who are involved in doing the business in the form of a company. Right, friends? So this is 447 for all of us. So we have covered three aspects: dormant company, government company, and 447 as a fraud. So we'll take a break out here. And after the break, we are going to start with the last part. Last part will be the Nidhi companies. And thereafter, after covering the Nidhi companies, we'll solve a few questions and conclude our session of miscellaneous provision under company law, giving you at least 4 to 5 marks. Great. So we meet after a short break. start for the miscellaneous provision, where we are going to cover the Nidhi companies. So friends, a typical provision, a new concept again for many of you if you have not heard of it, but very common. These are very common, especially in the northern part of this country, in the eastern part of the country, and at times also in the south also. But yes, all these companies have got a different structure of coming into existence. So if you remember, if you recall the world of banking, RBI, then we have the banks, we have the NBFCs, now it is the Nidhi companies. Then there was a word which was very common, especially with respect to negative news, that is chit fund companies. Then recently, about from 10 to 15 years, the concept of microfinance has come into picture. Now, all these are quite similar. But yes, in terms of governance, operations, there is some difference. Nidhi, chit funds, microfinance may differentiate on the basis of very small aspects. But yes, banking NBFCs are all together with respect to Nidhi companies and chit fund companies. So why this concept of Nidhi companies and what are the difference and what are the rules and regulations within the company law along with the respective rules? Let's understand that. So any questions till now? Let me just review any questions which you have raised. No questions. Great. So no questions till now, friends, on the other subjects. So Nidhi companies, section is 406. There are a lot of rules with respect to Nidhi companies and sections are very few. So 406, which defines Nidhi companies. So definition is very simple, friends. Definition is not that much complicated. And 406 says that means a company, Nidhi or mutual benefit society. Nidhi or mutual benefit society. A company which the central government by notification in the official gazette declared to be Nidhi or mutual benefit society. So a company which has been defined, declared by the central government to be a Nidhi company. So that is a simple definition. But technically speaking, what could be Nidhi companies? So Nidhi means a company which has been incorporated as a Nidhi with the objective of cultivating the habit of thrift and saving. Thrift means saving only. Small saving. So instead of spending small money somewhere else, they say, please save that amount. Among its members. So that means there will be a group of members. And they will say to the group of members, please save the amount. Receiving deposits from and lending to its members only. So Nidhi company will be formed with a group of members. And they will accept deposits from the members only for the purpose of cultivating the habit of what? Savings. Otherwise, we'll find that people who don't have income, they live on a hand-to-mouth situations where they spend whatever they earn. But when you find these companies in existence in front of you, which promote that please save, even if it is 100 rupees a month, please save and deposit with us. 500 rupees a month, not a problem. For their mutual benefit. So deposit and lending is done only from the members. So it is by the members, for the members. Nidhi company, by the members, for the members. Bank, from anyone to anyone. They can receive deposit from anyone, give money to anyone. NBFCs, they cannot operate savings current account, but they can give money to anyone. So they raise funds from other sources and can give money to anyone. Nidhi companies, by the members, for the members. I hope this differentiation is clear. This differentiation between bank, RBI and Nidhi companies should be clear in your thought process. What is a chit fund, friends? Again, chit fund is similar to Nidhi company. But the difference lies in that a chit fund will receive deposit, let's say, in small installments on a daily basis or on a weekly basis or on a fortnightly basis or a monthly basis, while in Nidhi companies, their deposit can be in a whole also. But the basic underlying concept of chit fund is same. It is like taking deposit from the member and providing it to the members. But even for the providing manner in the chit fund, it is purely based on a lottery system, same as the kitty party part. In Nidhi, not necessarily there is a lottery system. Whoever is in the need of money, they can apply and get the money. While in chit fund, it is more of a lottery system to whom the money will be given for a particular month. So friends, for both the Nidhi and the chit fund, the concept is same, to cultivate the habit of savings, but yes, with some operational differences. The whole idea is again to reach out to smaller people where banks cannot reach, where there is less of accessibility. But today, because of the development of digital banking, fintech companies, post office going digital, we know that the banks are reaching to the lowest possible level of the strata in our country, but still there is some limitation, and therefore the role of Nidhi company was recognized. And in the northern part of this country, eastern part of the country, there are many Nidhi companies, chit fund companies, which are operational. If you go out, Google out and search Nidhi companies, you'll find that there are many Nidhi companies which are listed. And because of all these transactions which were happening, there was a need that these should be formed, should be brought under the net of law. And therefore, the provision was introduced. And now all Nidhi companies are governed by company law, along with the specific rules framed for Nidhi companies. So I hope the differentiation between the banking sector and the Nidhi company chit fund is clear. The objective of Nidhi company is very clear. So any Nidhi company which does these kind of operation will be declared as a Nidhi company. And once it is declared as a Nidhi company, by definition, that will be termed as a Nidhi company. That is 406. Right, friends? So now 406, along with Nidhi Rules 2014, amended by 2020. There are about more than 24, 25 rules for all these Nidhi companies. We'll go through those rules. Again, as I said, few important aspects which you should remember, not only for exam purpose, but because of the knowledge purpose. Plus it is helping you in exam. And maybe the rules maybe are very exhaustive. So during a revision part, you can just quickly go through the rules part, only highlighting understanding those important rules. Because again, in exam, technical questions may be difficult, but yes, few important rules which we are going to discuss may help you in getting more marks. There's one definition, net owned funds. We'll understand later on why this definition is required. So let us start with the rule number 4, which talks about the requirement of incorporation, the conditions for incorporation for Nidhi companies. Conditions for incorporation for Nidhi companies. So Nidhi company shall be a public company. First, it should be a public company. And minimum paid up equity share capital of 5 lakh. So it has been specified under the law. They will not be entitled to issue preference shares. They will not be entitled to issue preference shares. And if it has been issued previous to the commencement of this act, they will be redeemed. So it's more of a crucial issue, crucial part. Very important, friends. The object under this MOA will be the object of cultivating the habit of thrift and savings among its members, receiving deposits and lending to its members only for their mutual benefit. So that should be very clear. Apart from that, every company which has been incorporated as Nidhi should have the last words Nidhi Limited as part of its name. It should be part of its whole process. So you'll find the last word Nidhi Limited in every company's name. The conditions which they have to fulfill to be formed as Nidhi companies. So incorporation condition, I think you should remember 1, 2, 3, 4. 4 points. 4 points. Incorporation conditions. Then further conditions to after being incorporated is that within a period of 1 year from the commencement of the business, it has to ensure that it should not have any members which is not less than 200. So they need to increase the membership to 200 within 1 year. I think 200 is a very small amount. Net owned funds of 10 lakh rupees or more. Net owned funds of 10 lakh rupees or more. This is again an exam related point. So conditions for Nidhi company after being incorporated as a Nidhi company. Now what is net owned funds? Net owned funds mean aggregate of paid up equity share capital and free reserves as reduced by accumulated losses and intangible assets appearing in the last audited balance sheet. I hope this is very clear. I think it is common everywhere. It is the same fund, same definition. Equity share capital plus reserve surplus minus accumulated losses minus the amount of intangible asset. So that should be equal to how much? Of 10 lakh and more. Unencumbered term deposit of not less than 10% of the outstanding deposit. Unencumbered means free of any charge. should have deposit free of any charge of not less than 10% of the outstanding deposit. So whatever deposit it receives from the members, let's say 1 lakh, then out of that 1 lakh which has been deposited, at least 10 should be unencumbered. That means it should be free of any charge. That means it should not be given as a security for taking a loan. So minimum 10,000 and more, it should be free of charge. They need to ensure that. It is to ensure that there is enough liquidity to the particular Nidhi company. If every deposit is charged against an outstanding loan, probably the Nidhi would not have enough liquidity to give loan to other members if required. And ratio of net owned funds to deposit of not more than 1:20. It should not be more than 1:20 so that there is no overburden, further liability in comparison to the equity share capital. It is similar to as debt equity ratio, friends. So these are all conditions to ensure that the Nidhi company does not go overboard, raises more funds or has more liability in comparison to what they have given to the members. Then further conditions, friends. These are more procedural conditions. Within 90 days from the close of the first financial year after incorporation, in the second financial year, the Nidhi shall file a return of all the statutory compliances in form NDH1, certified by a company secretary or a chartered accountant. So they need to file a compliance report within 90 days from the end of the financial year. And if they are not able to comply with any of the rules, let's say if they are not able to get 200 members, if the deposit ratio is not maintained, if the unencumbered deposit is not more than 10%, then it has to file an application and call for an extension that please give us more time to comply with the requirements. And the ROC and the registrar, the regional director, not the ROC, sorry, the RD, the person who is above ROC, remember, the regional director may give the permission for the same. And if there is a continuous failure beyond the second financial year, the Nidhi company shall not accept further more deposits until it is able to comply with the provisions. So what could be the possible exam question, friends? Possible exam questions are: what are the conditions to be fulfilled for in the first year of the operations of the Nidhi company? And if they are not able to comply with the same, what is the process to be adopted by the Nidhi company? So conditions 4, process, they will apply, they have to file within 90 days a report, either stating that they have complied with the requirements, and if not, they will apply for an extension of particular period, and the regional director may give the further time period for compliance part. And if they are not able to comply with the second financial year, they will not be entitled to raise further deposits till they are complying with the requirement. This is the answer which you have to give. Very important, friends. Very important. Prohibitions. Prohibition. Now, what does prohibitions mean? Any questions, friends? No. Prohibition means restrictions to the business operations of the Nidhi company. So what are those restrictions to the business operations of the Nidhi company? Carry on the business of chit fund. That means they are not allowed to do chit fund business. Hire, purchase, lease, insurance, acquisition of securities issued by any other body corporate. That means they are not allowed to invest in equity instruments of private limited company or even for listed companies. So their domain has been restricted for the members by the members. That's it. Remember, right? For the members, by the members. No other business can be done. They cannot issue preferences as already discussed. Current account opening is not allowed. Current account opening is not allowed. Acquire another company by purchase of securities or control the composition of board of directors of any other company in any manner whatsoever, or enter into an arrangement for the change of its management unless it has passed a special resolution in its general meeting and obtained the previous approval of the regional directorate. That means if it wants to acquire any other Nidhi company, probably they need to take a prior permission of regional directorate. Only after passing a SR in the general meeting. So Nidhi company can expand, but then only by this virtue of this mode. Carry on any business other than business of borrowing and lending, that is fine. Provided that, this is again important, an exception, this could be an exam related point. Nidhi companies, after having, which have adhered to all the provisions of this rule, may provide a locker facility on rent to its members, subject to rental income from such facility not exceeding 20% of the gross income of Nidhi at any point of time. This is important. So this exam question could be, can Nidhi companies, or a case could be created where the Nidhi company's financial data is given and it is said that the Nidhi company has entered into new business of giving out locker rent to its members, locker facility to its members, and the income is, let's say the total income of the Nidhi company is 10 lakhs and the income of locker rent is 2,50,000. 2,50,000. So as per rule, it should not exceed 20%. So which is wrong. That means somehow the company, Nidhi company is not complying with the law. So either it should. One second. I said it should reduce the income part, or if it is not there but to comply, probably the regional director has got the right to take any action. So this is exam question, friends. Locker rent facility allowed. F point, again similar. They cannot pledge any of the assets lodged by its members as security. No, you cannot pledge it as a security for taking further loan from somewhere else. Not at all allowed. It is very clear that you have to take only deposits from the member. Then why they are repeating it, take deposits from or lend money to any body corporate. But the provisions are, because can a body corporate be a member of a Nidhi company? The answer is no. Because it is said that they cannot take deposits or lend money to any body corporate. That is why this provision is there. That means, can a body corporate become a member of Nidhi company? The answer should be no. Because they cannot take deposits from a body corporate. So primarily they are focused on individuals. A Nidhi company enters into an agreement with another finance company, Paytm, for lending activities. Answer is no. In its borrowing or lending activities, they cannot do it. Even if Paytm is telling that I will lend it only to your members, no. You cannot enter into any partnership arrangements for borrowing or lending activities. That means Nidhi company has to directly approach to its members, prospective members, for receiving deposits and giving loan to them. They cannot have any marketing agency like DSA or any other fintech companies which have come in large numbers today to give away loans. So therefore, they will not publish any ad for soliciting deposits. That means, how do they raise deposits now? That is the question. So if they are not allowed to do any, take any body corporate, they are not allowed to enter into an agreement and appoint someone agent, or they are not allowed to do any advertisement. Probably it is more through referral businesses. The members will refer, and that referral business, the word of mouth will spread, and accordingly, more members will bring in more members. However, as I said, through referral business, private circulation of details of fixed deposit scheme among the members of Nidhi carrying the words for private circulation shall not be considered to be an advertisement. So to members, they can always circulate things, and probably through word of mouth, it will spread. Pay any brokerage or incentive for mobilizing deposits from members or so for deployment of funds or for granting loans. Friends, anything which is outside the members, anything which is there to attract new people, it is not allowed for Nidhi companies. They work in very restricted environment. But still remember, friends, there are Nidhi companies having deposits of 10 crore and more. As I told you, they have spread their wings and reached out to that particular level where banks have not reached so far. Therefore, just one second. Sorry, I had a bad throat. Yes. So let's take up this example and see whether the concept has been understood or not. So Sunshine Benefit incorporated as a Nidhi company under the Companies Act. The board of directors have decided to provide locker facilities on rent to its members and have estimated that the rental income from lettings would be around 25% of the gross income of the company. Examine the validity of the case. So I think we all understand now. The validity is that as per Rule 6, if the Nidhi company has adhere to all the regulations of the rules, then it is allowed. First, they should all adhere to the regulations. Then they are allowed to provide locker facility only to its members. And third, the condition, it should not exceed 20% of the gross income for a financial year. So in this case, because it is more than 20%, it is not allowed. The board cannot provide it. So they have to adjust and ensure that it is below 20%. So that was about all the conditions. Remember, the conditions are very restrictive, and if you want to remember, please remember anything beyond the level of members is not allowed. So try to learn the points based on this concept. Along with this locker facility, plus no advertisement is allowed. No advertisement to attract. So these two are broad categories. No members and advertisement. Then something about share capital and allotment. Share capital and allotment. Abhilash, the reason is that because Nidhi company only works for its members. And if they give advertisement is basically given to attract public at large, which is not the objective of Nidhi company. So therefore, they are restricted in giving a public ad. And when you want to give loan only to its members, they have this facility to publish any ad which is for private circulation. So they know their members, they know their target audience, so they can circulate it to them only. So instead of giving in a public ad, I think a private circulation is being allowed. Is that fine, Abhilash? Okay, in terms of share capital, every Nidhi shall issue fully paid up equity shares of the nominal value of not less than 10 rupees each. So minimum face value has to be 10 rupees, sorry. No service charge shall be levied for issue of shares. Every Nidhi shall allot to each deposit holder at least a minimum of 10 equity shares or shares equivalent to 100 rupees. So whatever is the criteria, minimum 100 rupees share should be allotted to its members. Provided that a savings account holder and a recurring deposit account holder shall hold at least 1 equity shares of 10 rupees each. So if you are opening a savings account and a recurring deposit account or a recurring deposit account, you should at least hold 1 equity share of 10 rupees each. Then only you are allowed to open a savings account. That we have already understood. So minimum face value 10. Each deposit holder should at least have a minimum of 10 equity shares or 100 rupees worth. But if deposit is only to the extent of savings account, you should hold at least 1 equity shares of 10 rupees each. This is already understood. This is already a condition for membership. No body corporate or a trust as a member. Members should not be below 200. And minors should not be admitted as a member. However, deposits may be accepted in the name of member. So this is regarding the membership rule. Very easy. No confusion, friends. Net on funds, as we have already discussed, of not less than 10 lakh rupees or such higher amount. Branches, yes. So how do Nidhi companies expand? Obviously, they can open up their branches. And the conditions for opening of branches is that if it has earned net profits after tax continuously during the 3 preceding financial year, They may obtain 3 branches for a particular district. If they want to open more branches within a particular district, obtain permission from RD. And once they open up any branch, they need to intimate to the RD. So branches first, profitable, 3 branches within a district. If more than that, take a permission from RD. Very important, they cannot open up branches outside the state. Abhilash, the weight of the marks, very difficult. I think, not sure that it is always asked in exams, because it is a part of miscellaneous provision. So under miscellaneous provision, one question will come, but whether that will come from Nidhi company, dormant company, strike-off company, fraud, that is not sure. So I would not say 100% probability of being asked in the exams. But yes, as I said, because it is very specific, so understanding the specific provisions is easy for you. Okay. No Nidhi company shall be allowed to open the branches unless it has complied with all the requirement. So again, a standard thing. And if they are allowed to open, they should not close down before giving a public ad. So they can give an ad to this extent that they are closing down the business before 30 days. And that particular notice should be displayed at every branch. Now, with respect to certain deposits and loans, let us focus on that, because finally the basic purpose of Nidhi company would be to accept deposit and give loan. So what is the rule regarding these? So total deposit should not exceed 20 times its net owned fund. We have seen the ratio 1:20. They have to maintain. So the deposit should not exceed 20 times its net owned fund. And the fixed deposit shall be accepted for a minimum period of 6 months and a maximum period of 60 months. That is for 5 years. Recurring deposit shall be accepted for a minimum period of 12 months and maximum of 60 months. RD account, which we all know what is RD account. In case of RD accounts which is mortgaged to a loan, it should correspond to the tenure of the loan. Maximum balance in a saving account shall not exceed 1 lakh, and the rate of interest shall not exceed 2% above the rate of interest payable on the savings bank account. That means if the savings bank account by nationalized bank is around today 3.5 or 4%, they are allowed to give 6%. Then on the fixed deposit and recurring deposit, they are allowed to give a maximum of what is being allowed to the NBFC companies. So a lot of caps are there. So for the respect of deposits, you need to learn, if we really want to learn on savings, RD, fixed deposits. And if they want to foreclose the deposit, then there are certain conditions for foreclosing the deposit. I think this is only for ready reference purpose, just for knowledge purpose. Getting into so much of details for exam, I think may not be worthwhile. But still, if you want to do it, then you should not pay any deposit within a period of 3 months from the date of acceptance. Then if the Nidhi pays any deposit after a period of 3 months, the depositor shall not be entitled to any interest up to 6 months from the date of deposit. So foreclosure of deposit may cause a loss to the depositor. And if it is a foreclosure before the expiry date, then the rate of interest will be reduced by 2%. That is there in most of the cases. And in case of death, it will be allowed for, because the repayment is done because of a natural event. Coming to the loan part. Loans given by Nidhi companies. The loans given by Nidhi to a member shall be subject to the following condition. 2 lakh rupees, where the amount of deposit of such Nidhi from its member is less than 2 crores. So if the total deposit is 2 crores, maximum amount of loan to be given is 2 lakh rupees. 7,50,000 if the amount of deposit is more than 2 crores. So there's a slab. So what we need to do is to draw a slab. And that slab is based on the deposit part. So you need to prepare the slab, deposit, loan. In crores, 2 in lakhs. More than 2, less than 20, 7.5. More than 20, less than 50, 12. More than 50, 50. This is the slab which you have to remember. So deposit is crores and loan is in lakhs. This could be an exam question. So please remember this chart table of the slabs of the amount of loan given to each individual member. Each individual member. But if the Nidhi company is incurring losses or not made profits, then the loan amount can be only to the extent of 50% of whatever is given in the slab rate. If there are losses, 50% of the slab rate. And if there is a default from any member, he will not be eligible for further loan. Though even he falls under the condition, but he will not be eligible for further loan. So remember these 2 points in addition to whatever we have studied. Then all this calculation will be done on the basis of the last audited financial statement. All this calculation will be done on the basis of last audited financial statement. Now, can Nidhi company give loan against any securities? The answer is yes. And the securities are specified as gold, silver, jewelry. Loan of less than 1 year. Immovable property. And the condition for loan against immovable property is that total loan against immovable property shall not exceed 50% of the overall loan outstanding on the date of approval by the board. And the individual loan shall not exceed 50% of the value of the property. So the overall loan should not exceed more than 50% of the overall loan outstanding. So that means total loan outstanding is, let's say, 2 crores. So loan against property should not be more than 1 crore. And for an individual, if he is given a value of property as mortgage as 10 lakhs, the amount of loan cannot be more than 5 lakhs. And the period of loan shall not be more than 7 years. So gold and jewelry, 1 year. Property, 7 years, subject to 50% criteria. Against government securities, answer is yes. It should be pledged. And the loan period should be to the extent of that government security maturity period. So that was about all the loans. So remember, it's the slab rate, loan against securities, jewelry, property and government securities. With regard to property, you should remember the typical conditions of 50%. This you should remember from exam point of view. The loan part. Rest you can leave it. Deposit part, net owned fund is very simple. Branches is again important. Rate of interest, I think, again, you can ignore it, but very one simple rule. It should not exceed 7.5%. Above the highest rate of interest offered on deposits by Nidhi. So if the rate of interest is 6% as the highest rate of interest on the deposit, the maximum rate of interest cannot be more than 13.5. Maximum rate of interest cannot be more than 13.5. And the rate of interest will be same for all the members or the borrowers. Okay, with respect to directors, hold office up to a term of 10 years. Good. They shall be eligible for reappointment only after expiration of 2 years of ceasing to be director. That means 10 plus 2. So after 12th year, they are eligible for reappointment. If by virtue of any reason the government has extended a tenure of a director, it shall terminate on the expiry of such extended tenure, and it shall comply with the requirement of director's eligibility and disqualification. That is same. So remember, this is important. This is important. He should be a member of Nidhi, and he should be eligible only for 2 years after the expiration of 10 years. So what will the many members benefit out of being a member of a Nidhi company? We understand that he has become a member. He is not opening any saving account. Neither he is taking any loan. What he expects? So he expects dividend. Because as a Nidhi company, probably they will be operating on a very strict domain and very less chances of incurring any losses because rate of interests are controlled. The loan element is controlled. Deposit element is controlled. So if they are earning profits, they need to pay out dividends. And the dividend amount cannot be exceeding 25%. So they can declare dividend A, B, C. So first is obviously the accounting rule. Third is obviously a default rule. And second is there has been no default in repayment of matured deposits and interest. That means the Nidhi has enough liquidity to pay out for the deposit part also. So an asset liability management is a concept which is very important for all the financial services industry. And normally they try to match it, that what is the deposit date, maturity date, and what is the cash flow which is arising on that particular date. So that matching is very much done. And if that matching is done properly, then the chances of default in terms of cash flow may not be there. Yes, important perspective. Yes, from our perspective, that is the auditor's perspective. What are the points relating to auditor part? So no Nidhi shall appoint or reappoint an individual as an auditor for more than one term of 5 consecutive years. So that means I can be appointed as an auditor for 5 years. Thereafter, I am not eligible for reappointment. This is with respect to an individual. This is with respect to an individual. Remember. For a firm, it can be an executive, it can be for 2 terms for 5 consecutive years. And when they can be re-eligible? They can be eligible again after expiration of 2 years of the completion of his term. That means for an individual, 5 plus 2, 7th year onwards, 10 plus 2, 12th year onwards. So that means it gives an opportunity. You need to identify those Nidhi companies where the auditor is there for last 5 years. That means a new auditor will be appointed. If it's a firm, wait for 10 years and then you get a chance for appointment part. And then you remain there with the Nidhi company for 10 years, subject to obviously your terms and conditions being approved by the Nidhi company each year. As a job of the auditor, along with all the audit reports and financial statement, you need to give an additional certificate that the Nidhi company is complying with all the rules and regulations, and it will be part of the audit report which you are submitting. Certain requirements on part of Nidhi company, they have to file an half-yearly return each year, certified by company secretary or chartered accountant in practice. Yes, penalty for non-compliance, as there is always some penalty attached to any of the rules. Here also, there is a penalty. Just for reading references, we cannot recall all those penalties. But if you are actually studying Nidhi company in detail and you have an interest, then you may read that and learn that. You never know. A part of MCQ also. It can come as a part of the MCQ also. Okay, one practical question. Let us see. Any questions, friends? Yeah, okay. So, yes, Abhilash, you have asked if the loan of Nidhi company is not able to recover, what is the provision for it? Yes, so you mean to say the recovery part? Yes, why not? It has got all the rights to recover the loan from the person who has taken a loan. No, nothing is stopping the Nidhi company for taking appropriate steps for recovery mechanism. So there is no such restrictions on the recovery part. So in rules, we have not studied on the recovery part that if somebody is not paying, the Nidhi company cannot recover it. They have all the right for recovering part. Remember, they can appoint an agency for recovering also. They cannot appoint an agency for mobilizing of deposits, but they can appoint an agency for recovery of loan. That is possible. So recovery part, they have all the right, which the normal banking NBFC companies has got. In Rule 15, loans where will deposits equal to 20 crores be covered, B or C? Rule 15. Okay, in terms of loan, you are talking, yes. Deposits is equal to 20 crores be covered under B or C. Okay, deposits is equal to 20 crores, you mean to say. Okay, so deposits equal to 20 crores will be covered under B. Because C says more than 20 crores. So till 20 crores, it is B. And till 50 crores, it is C. I hope this is clear, Divya. Abhilash, I hope I will be able to answer your question also. Okay, so the question is, Suhani proposes to reappoint Mr. Hemant, a director who has completed a term of 10 consecutive years as a director of Nidhi. So it's about director. Comment on the validity of the above proposals with reference to Nidhi rules. So as per rule number 17, he can be appointed hold office up to 10 consecutive years and only be eligible after 2 years of the appointment part. Similar question could be asked for the auditor also. For individual 5 years, for a firm 10 years. Appointed every 5 years. Right, friends? I hope the concept of Nidhi companies is clear. Just to revise it in brief, Nidhi company, the purpose is very clear: to cultivate the habit of savings among small people, to reach out to small people where companies have not reached, banking companies have not reached, And the purpose is to attract members, make them members, tell them to open account in their Nidhi company, and if need, they may take a loan from the Nidhi company itself. They don't need to go elsewhere. So criteria of conditions for incorporation are given. Conditions for forming the Nidhi companies are given. Condition for share capital is given. Condition for accepting deposits are given. Conditions for giving loan are given. So if you remember all these 5 conditions, you can very well ignore the deposit part. But if you remember the conditions for registration, incorporation, conditions for incorporating the running company as a Nidhi company, conditions for loan, and the appointment of director and auditor, probably I think that is more than sufficient. Branches, yes, I forgot the branches part, yes. So, incorporation, conditions, not less than 200 net owned funds, unencumbered deposits, and the ratio of deposit to net owned funds, and submission of 90 days report, not complying, take a permission to comply. Prohibitions, this is important. What a Nidhi company cannot do. Share capital, branches, and loans. So I think if you remember these provisions, that will be more than enough from exam perspective. So any questions which you have? I'll take up few MCQs for all of you. And let us see whether we have been able to understand those concepts. Just 1 second. Let me open up the presentation on questions. I hope you are able to see the questions. Just a confirmation. Yes, are you able to see the questions? Yes, reporting as per the audit reporting criteria, it is done as per the CARO. So I hope the questions are visible, and hope you will be able to answer the questions. This has been again uploaded on the website. So it is Board of Studies query box. So you can very well download it from there. If not uploaded, it may be done today or by tomorrow. So I hope the questions are visible for all of you. Yes? No? Yes. Okay. Great. So what shall not be the duties of registered valuer? It is comprising of all the topics which we have covered so far. So the question is, what shall not be the duties? Not. So to make an impartial, true and fair view, it is a duty. To exercise due diligence, it is a duty. To undertake valuation of any asset in which he has a direct or indirect interest, that is not the duty, friends. He cannot take valuation of those assets where he has direct or indirect interest. So correct answer is this. Okay, so here on an order agreed by registrar for notifying the company as striked off, what is the time limit which is available for appeal? So the time limit, remember, we had different time limits. One is 3 years, and there was an extended time limit for 20 years for the members, the creators, and the company itself. So here it is to the tribunal within 3 years. Tribunal within 3 years. Tribunal within 3 years. If a registered valuer has performed the job to defraud the company or its members, he shall be punishable. So again, you have to remember section 247(3) and 4, 247 subsection 3 and 247 subsection 4, where the penal consequences are given, punishment and damages, remember. So punishment has been given. So the punishment is again, along with the fine, there may be an imprisonment also. So fine of not less than 5 lakh and imprisonment of not may extend to 1 year. So both A and C, both A and C. Remember 247(3) and 4, 247(3) and 4. So this is a question with respect to the fine for contravening the rules of Nidhi. As I said, it could be part of the MCQ. So very well, you can answer it as we have discussed just now, that what is the maximum amount of fine which can be imposed, and the continuation default. So this is again rule number 25, rule number 26 of the Nidhi rules. This is with respect to section 447, friends. 447, we have discussed 447. 6 months and 10 years. 6 months and 10 years. So remember 10 lakhs and 1% of the turnover, whichever is lower. 10 lakhs and 1% of the turnover, whichever is lower. 10 lakhs or 1% of the turnover, whichever is lower. So this is done, 10 lakhs or 1% of the turnover, whichever is lower. Where the company has not been able to commence its business within 1 year of its business, one year of its incorporation. What is the consequence? Remember, 1 year. Dormant company is not there. It does not fall under the category of 1 year. Dormant company is when you yourself apply of a specific situation and 2 consecutive years. But if it's in the start of the incorporation, I think the registrar has got the power for striking off. Dormant company will not come into picture at the initial years. I think you should be able to answer it, friends. You should be able to answer it. (447), I think we have just studied and we have stressed on those points. Public interest, no public interest, public interest, no public interest. Amount wise also clarity is there. More than 10 lakhs, less than 10 lakhs, more than 10 lakhs, no public interest, more than 10 lakhs with public interest. So more than 10 lakhs and public interest, minimum period of imprisonment is 3 years. Wherever public interest is involved, minimum imprisonment is of 3 years. So contravention of any law by a registered valuer, again remember 247(3) and 4, punishment and damages. Damages is to the extent of remuneration which is received by that valuer, and also pay the damages which is caused to that person or the company. So along with the remuneration, he has to pay damages. So all of the above. All of the above. Nidhi company may issue what? Can it issue preference shares, friends? I think it is very clear, very simple. 1 mark, 100% you should score. That is why I said, when you study these small topics, there are few questions which can give you additional 1 or 2 marks which you never thought of. And these are very simple provisions. I think if you read if you go through our lecture once, I'm stressing on few important points. And if you are able to recall those important points, even for MCQ part, that is more than sufficient. I think 1 mark, we all understand the importance of 1 mark in C exams or any other exams. So they can issue only equity shares. Again, this is important. We have studied this in terms of Nidhi company, no body corporate or trust as a member, and shall ensure that its membership is not reduced to less than 100 members at any time, both A and B. We have just studied. I think you should be able to answer it. Not a complicated one, friends. Can a valuer take evaluation of any asset in which he has direct or indirect interest? Anybody can answer it. No. Again, a very simple one. One simple provision, if you are able to recall, what is the maximum amount of dividend which the Nidhi company can declare? Maximum amount of dividend, which we all know, the maximum amount of dividend which a Nidhi company can declare cannot exceed 25%. So straight away 1 mark. Very simple one. Again, for government companies, we have gone through where there is more than one member, one state government member, then they have to prepare and report. Each state government has to prepare a report within 3 months from the end of the AGM date, and to be presented to both the houses of the legislature, both the houses, and by both the government. So if there's a 40% paid up share capital held by government of MP, 20% by UP, then it should be prepared by government of, okay, the mistake, there's no correlation. So it is like, it should be MP and Punjab and Rajasthan. So it should be prepared by government of Punjab and Rajasthan. in 3 months. For appointment of valuers, who should appoint the valuer? Remember, we have studied under 247(1). The appointment has to be done by audit committee. In the absence of audit committee, it is the board of directors. So remember, friends, audit committee is the appointing authority. We have just discussed it now. Directors of Nidhi company to hold position till how many years? Till a consecutive period of 10 years. And thereafter, there will be an cooling period of 2 years. And thereafter, they are eligible for reappointment. So again, very easy for all of you to answer. 10 consecutive years plus 2 years. Cooling period for valuer, we know that 3 years prior and 3 years post, he should not be eligible for taking any other assignment other than valuation. So we have discussed a span of range of 6 years, friends. That means a cooling period is of 3 years by default. It does not say that 3 years is a cooling period. It says that he should not take any other assignment within 3 years. So after 3 years, is he eligible? The answer is yes. So here the cooling period is of 3 years, friends. Abhilash, that you have to take the feedback from Board of Studies. Again, a simple one, friends. We know the minimum capital requirement for Nidhi company. And that the capital should be consisting of the equity share capital. So that is again simple. (447) is not in your course. Yes, for minimum number of directors for a dormant company, again that discussion was done. For a dormant company, as per the rule, there should have minimum directors for 3 for public limited, 2 for private, and 1 for 1-person company. So 3 to 1, 1 2 ka 3, 3 2 ka 1. 3 to 1. So an application under 248(1) can be filed only after fulfillment of certain conditions by the company. Remember, by the company, when they can file an application under 248(2), subject to fulfillment of conditions under 248(1) also. So when they have extinguished all its liabilities, when a SR is passed, or approval of the consent of the 75% of members in value has been taken. So all of the above. I think here there's some mistake because there's no public interest involved. Okay, less than 10 lakhs and the answers are not matching. 50 lakhs is the fine. Yes, so as per section 455, the dormant company definition, inactive could be one who has not made any significant accounting transaction when there's no business operation and has not filed financial statements and annual returns for a continuous period of 2 financial years. So this is all from my side, friends. I hope I've been able to clarify all your doubts, thoughts, and any questions which you have in your mind, you may please ask. or any further query, you can write a mail to Board of Studies, or you can directly write a mail to me also if required. And I will be able to answer to your query. So just refer to the reference of the Board of Studies lecture, and then probably I'll be able to answer to your query. So, right, friends, hope there is no further query. We have, okay, thank you, Vidula. Hope you had a great learning in the last 4 classes where we had covered a lot of small topics. I'll be back again after some time with a gap of around 15 days with my last lecture on probably the topic of SEBI. So thank you. And till that time, have a great learning month. Though we all understand this is a month of love and affection, but along with the love and affection, if we shower love on studies, you will get more rewards than anywhere else. Thank you.